Hello, everyone. Very excited to kickstart my series on the Merkle again. And today we have a special guest, a very good friend, very respected writer on Web3, Sal from EV3 Ventures. If you haven't heard of them or haven't read their various blog posts online, I highly recommend it. It's always very enjoyable hearing things from someone who has been through traditional financial markets. So, Sal, welcome to the show.
Thank you. I'm excited to be here.
Great. Maybe you could start off by telling us more about your background, where you started, and how you eventually landed up in Web3.
Absolutely. Thanks for having me on the show. Excited to get to share the escape velocity story and chat a little bit about the area of crypto that we're interested in with your listeners. I'm the founder of a venture firm called Escape Velocity. I have a partner whose name's Mahesh, who we run the fund together. We've been investing personally in crypto for a long time and professionally for a couple of years now, but started EV3 last year to focus on decentralized infrastructure. And that for us means crypto we think of as a very computer that can make a commitment, and that enables this entire sort of application space of developers to build applications that are incredibly neutral. That was never possible before. And we got really obsessed with this idea of how do we build infrastructure or real world applications that also can make commitments. That just enables a whole new generation of entrepreneurs to build exciting, new, fair applications in really big markets that are underserved. I got into crypto actually, but before, a long time ago when I was a kid, before Bitcoin, there was the first, what I consider crypto or DePIN network maybe, was a network called SETI, where people could contribute their spare compute usage to signs of extraterrestrial life out of the data collected from this massive telescope in Arecibo, Puerto Rico. And so this is around in like the early 2000s. There was a predecessor to it called Folding at Home, where before humans had folded the genome, people could similarly contribute their compute power to try to fold the human genome. And this was like my path into crypto. I was just really nerdy about aliens and was like trying to mine signs of alien life from laptops in my childhood. And that led me down getting into Tor and music sharing and the deep web and a whole bunch of other things that eventually led me to discover Bitcoin. I'm also from Venezuela. And so as a teenager, I went through a couple of years. I was living in the States, and so I was very fortunate not to experience it firsthand. But in Venezuela in 2017 and 2018, the country slashed 5 zeros off the currency in 1 year and then slashed 6 zeros off the currency the next year. So it was one of the worst periods of hyperinflation anywhere in the world in the past couple of decades. And so going through that as a teenager made Bitcoin stick in my head in a pretty strong way.
Amazing. And you first worked in Goldman for a bit, and then another fund before launching Escape Velocity, correct?
Yeah, so professionally, my first job out of school was actually at a university endowment. So the folks at Carnegie Mellon University were kind or dumb, depending on who you ask, enough to hire me, but had an awesome experience there, getting to invest across asset classes from a very sort of wide point of view and hang out with a bunch of really impressive people and investment managers, and figured out that I probably wasn't going to work in private equity or hedge funds, and I didn't look up to a lot of those people, but there were a select few people in venture that I really looked up to. Went into the traditional finance path, worked at Goldman. That's where I met my co-founder, Mahesh, and we both went off to do investing jobs, myself at a firm called Rivet Capital, which is where we met when you were working at Multicoin, and Mahesh worked at a big private equity firm called Apollo Global.
Fantastic. So moving on to Escape Velocity itself, can you tell me more about the main thesis that Escape Velocity invests along? Because I do think it has evolved quite a bit since we actually first spoke.
Yeah, absolutely. Things never stay still in crypto. At a core level, our thesis is about decentralized infrastructure. And like I mentioned at the beginning, that's infrastructure that can make commitments. We try to take a very thesis-driven approach to where we deploy capital. So DePIN is a massive space. We have a strong point of view and invest in very few companies relative to the size of the opportunity, but we think these companies can be very big. And so the first space that we really got obsessed with was, we call it DWire, decentralized wireless. Basically the idea of how do we build like microgrid networks of radios that can provide internet connectivity to people by talking to each other rather than by relying on one big central cable in the ground or routing through a central data center. The reason we got really excited about this industry, one, it's absolutely massive. There's more than $1.5 trillion of cash flows that go to providing internet connectivity through either fixed or mobile internet globally every year. these companies have really not innovated since kind of like the late 90s. Like we figured there was a move from voice networks to data networks, but the way that we build telco networks is still the same. You raise a shit ton of money, you go and buy spectrum from the government, you buy a bunch of radios from Nokia or Ericsson, you try to build towers or you buy them from someone, and it's a very labor and intensive process. And the way that customers buy internet is very broken. Like it's like energy. Like you just expect it to work, and it's a core basic commodity. Like everyone should have internet access in a perfect world, right? And yet the actual product experience of buying internet is you might have multiple providers. You have a different provider for your home internet versus your cell phone internet. There's all these fees that you don't understand what you're paying for. They're bundling in really weird services with your cell phone for some reason. There's these dynamics around you get a handset for free, but now you're paying it off over many years. Like all these really weird games when all you really want is internet everywhere for free or for really cheap. And so this is a problem that we think we can spend multiple decades trying to solve, basically, and make tens of billions of dollars trying to solve this problem and get connectivity for people. And so this is how we think about networks. We think about how is infrastructure built today, and where is it under there are populations or areas or certain use cases for which it's really not working. And with crypto, where the underlying technology already works, for example, in cellular, like the radios, the chips, these are all well-defined technologies that have worked for many years. The hard part is in coordinating it all and creating an ecosystem around it. And that's where crypto is uniquely capable of. Through open source hardware and composability, you can bring people together to work together that never would have before. And so for internet connectivity, it's like bringing in landlords who before would have no interest in being part of a telco network. Now, I can get tokens for sticking a box on my roof and contributing to this global thing, even though I don't know anything else about it. It lowers the barrier and kind of democratizes the ability to participate in these networks. And those are the types of things that we think can be really globally important networks over time.
Very interesting. So EV3 has a very core focus on physical infrastructure, a shared network for capital resources coordinated through crypto incentives. Would you have a view on perhaps other sorts of networks, digital resources, or perhaps more generally this service resources, talking about, say, marketplaces just for internet software services?
Yeah, I think these are interesting. Crypto as a whole, as a coordination technology, I think will solve a lot of problems. And any marketplace, I think, can be made better by having some level of incentive alignment with crypto. That said, I do think that there's like 3 to 5 really special opportunities to build an asset that's like a super asset, I guess, that's not just like a marketplace with rights attached to it in a tokenized form, but that it's really like, when I think of tokenized, the perfect asset in my mind is a piece of tokenized bandwidth that gets me a pro rata right of all the internet connectivity in the world. And if one of these DY networks were to work, I think that's actually what you own. It's like a token that I can have a pro rata share of all the internet connectivity capabilities or capacity of the world at any given point in time in the future. And if you look at like how money was formed, these can be the basis of commodity money. It can be the basis of a whole lot of, it's like a real hard asset in that case that can be collateral for in DeFi. There's a lot of other layers of like composability you can tap into in that way, which I think are not true of, this like we'll use crypto for, I think crypto can be used for a lot of marketplaces basically, but there are a few unique opportunities, which is like create the global bandwidth asset, create the global energy asset, which are really special. And those are like the $1 trillion opportunities in crypto that maybe hopefully we find one of in our lifetime, but that's really what we're out to find and try to shoot for.
Yeah, it's a bigger market, a far bigger market, basically.
Absolutely.
I remember asking you this question when I was at Multicoin. Why are you looking at data DAOs or all the other cool, sexy stuff, ZKs, technical innovations? It is a bigger market and symmetric opportunity in that sense. Do you have a view on the kind of event path or the sort of things, the catalysts that need to happen for these DePIN networks to really achieve that global adoption that you were talking about?
Yes, I think there's many things, but if I had to boil it down to 3, there's a couple of things that are for the entire crypto market necessary. I think those are like liquidity. If you invest in crypto, I think it's because you believe it will survive, and it's reflexive to the upside. And so when there's not a lot of liquidity, like a lot of these networks are very resilient and will survive, but it's hard to have a spark to create something special. And so I think liquidity and relatedly regulatory clarity are two things that just broadly crypto we need to lower the barriers for everyday people to come and have fast scale adoption. For DePIN specifically, there's this aspect of how useful are the networks that you're building. It's easy to build infrastructure that's not useful at all. It's just like if you're like the government in the 1920s, you can pay people to dig holes and just fill them back up. And this is good for the economy technically because it's GDP, but it actually is completely useless. This is, one could argue that's Helium's LoRa network on the basis of usage today. Nobody's using it. And so it might as well have been just like digging a hole and filling it back up. Now, it's very non-trivial to build a physical infrastructure network that just works and coordinates itself like autonomously. And so I think like this is there are different levels of complexity and of like ambitiousness that you can go for in terms of use case. And we need to prove that these networks can build something of value that people will go and buy tokens or burn tokens or stake tokens and create sort of the demand side of the ecosystem that hasn't happened as much yet. Either in DY with Helium and all of the Helium followers have very low utility. In the storage side, even the leading storage networks have sub 2-3% utilization as a percentage of their capacity. And many networks are really not even generating revenue at all, right? They're in the bootstrapping the supply side phase of the network. And this is investor sentiment right now is doubting whether some of these DePIN as a whole category can actually generate revenues. But this is one of the things where as soon as one does it, it'll become clear that many of these other networks that are high quality actually have a clear path to generating a lot of high quality revenue that's not correlated to crypto prices, but it's true like fiat denominated revenues. It's dollars for gigabytes or dollars for megawatts or whatever else.
And I assume the first to achieve that the end state or the adoption that opens the floodgates to others will be something that can attract demand even on perhaps a smaller scale. Would that be right to say? Is there any particular sector you're watching out for and why?
I don't think of them as sectors, more so as very specific strategies that you can use. You can try to have the very thin layer where you basically don't interact with the end customer, but you hand off the customer ownership layer to somebody else. So I think of somebody like XNet in the DY space, which they're partnering with carriers. And so the carrier continues to own if you have AT&T or Verizon and you walk in an XNet cluster, you might never know that you're actually contributing to the XNet network. Your phone will still continue to say Verizon or AT&T. Just in the background, the transaction happens on a B2B basis. So we think this is one strategy of bringing cash flows into DePIN sooner. I think there are interesting opportunities also on the consumer side. When I think of as a whole, if you were to take a random person on the street and say, hey, the infrastructure that you own or have access to, try to generate like $500 of cash from it as soon as possible. What would you do? The two pieces that I think are the most interesting are, one, you can sell someone a solar panel. If you walk into your neighbor's house and you sell them a solar panel, you can clip $1,000 or $1,500 today for selling that lead with doing no extra work. So I think there is some sort of DePIN, if the goal is to find demand quickly, tapping into areas like that can be really promising. I think of another opportunity along those lines is like a decentralized Turo type of thing, right? Everyone has a car. You rent out your car for a weekend. You might make $300 or $400 or $500 off like utilizing your underutilized infrastructure. And so these are, when you take the frame of like, how do we de-risk demand generation as quickly as possible, these are like the things in venture terms like fastest payback in terms of investment that you can tap into in DePIN. So this is another strategy where it's the opposite, right? It's like you're only capturing like the customer demand referral piece of the value chain, but you're also showing demand really quickly with not a lot of hard work behind it.
Gotcha. Super interesting. And I suppose if we talk about DePIN, it seems like a market that will undergo some sort of geographical segregation. What is your view on that? Do you think certain areas in the world are going to adopt this infrastructure faster than others?
There are geopolitical reasons for the same reason that like you probably have a bank in each country, or the banks are not global in the way that DeFi projects are global. you might see actually DePIN might look more like centralized in that way, in the sense that governments might say, actually, I'm okay having open source telecommunications infrastructure, but I have to have some more control over it than like money, which is naturally borderless in nature. Let me put it this way, actually. Generating revenue for a lot of these projects, interacting with whatever the centralized grid is, if it requires it, is very different in different markets. In the UK, the energy market is much different than in the US. In the US, for example, we have, for telcos, we have free spectrum. So we have this band called CBRS, where anyone up to certain power limits can transmit on, in addition to Wi-Fi and a bunch of others. In the UK, you have Wi-Fi, but you don't have this cellular CBRS spectrum that anyone can use. And in the UK, you can have a full stack energy. This is a model that is at least doable if you have a lot of money in the UK, whereas in the US, it doesn't really make sense to speak of a full stack energy provider. And so, they're on a long enough timescale. Every crypto network, I think, is very decentralized and very global, but relative to other things in crypto, DePIN will likely have more geographic restrictions, just because generating revenue requires interfacing with these legacy parts of the grid.
Right, gotcha. All right, very interesting. That's loads of knowledge for our listeners to work with. You work with founders day to day, and as people come to you, people pitch to you. What sort of founders you are looking for? Founders who can really take ideas as ambitious as a DePIN project from 0 to 1.
I think the most helpful way of framing advice that I can give to founders in this is to think of people who start a venture fund or work at a venture firm. Basically, as an investor, you have 20, really lucky you have 20. Really, most people, some might get 3, some might get 5, some might get 10 shots on goal. If you start a venture fund during bull times, you might get 20 shots on goal, but that's where it caps out. You're not going to get many more than that. You get to choose over your investing career 20 founders. One of them has to build a generational company, or your entire career is down the toilet. And like, investors don't usually have a lot of functional skills, so there's not a lot of other stuff you can do. And so what we're really looking for is someone who I can confidently say, you're one of the top 20 people I'll meet for the rest of my life, who I want to dedicate all my working resources behind. And what does that mean? For us, it means somebody that's extremely passionate about the thing that they're working on. DePIN is, if you want to make fast money, DePIN is very much not the place for you. And so I recommend you go to other areas. And naturally, entrepreneurs that gravitate towards the space have a longer time horizon and a healthy respect for the complexity of what they're building. There's also, for specifically venture scale companies, a level of ambition that has to be like, you should freak normal people out on the street with your level of ambition like that. That's just the type of exits that we look for. As the return hurdles for venture capitalists are very high, and there's actually very few. It's really hard to build a massive company. Very few people do it. It doesn't happen by accident. It takes a ridiculous amount of ambition and focus and dedication and sacrifice. And we meet a lot of entrepreneurs that are really solid, that we have no doubt can go and make $100 million for themselves. But that actually doesn't move the needle enough from a venture perspective for us to be willing to use one of those 20 bullets in our revolver. And yeah, those are the things. If people have an authentic passion for what they're building and a track record of actually executing on it and a ridiculous level of ambition to build something big, that's where we get excited.
On that note, would you say for the aspiring founders or founders out there who are listening, there's some great content as to bootstrapping, launching token networks on EV3's website. Probably will link it in the show notes below. Would you say you have some core pieces of advice for people who are entering the industry, bootstrapping a token network, specific to the DePIN area?
In terms of actually structurally launching a token, a regular founder would have no reason to ever be involved with these until you're like at IPO stage and you're dealing with Goldman bankers and they're here running sensitivity tables for you and telling you your CAC and LTV and the dilution that you're going to take and how much fees are for raising capital and how debt markets are going to look 12 months forward. Like all this stuff that you wouldn't necessarily need to know. Crypto founders need to know it like from day one. And so I think finding there's only 2 ways to learn, which is use all the crypto projects and get rugged and lose money and just be a degen. Like that is, you just have to do it to be part of the culture. And there's no better way to learn than to make mistakes and lose money. Also, getting good advisors. Those are good mistakes to make on small amounts of capital. You don't want to make those with other people's money. You want to make those with like tiny amounts of your own money. Finding good partners who've seen it before is really important. People and the cohorts in crypto are short. People come and go, but the people who stick around long enough, typically you can do reference checks and find out who are the people that have acted with solid long-term interest of themselves and their partners over time. I think that's critically important. I guess also understand that like the way that people do things today is completely broken. If you take the median path, you will fail. That's true of being an entrepreneur in general, but especially true of the token launch methods today. If you take the market status quo way to launch a token, you're dooming yourselves for failure. And so despite it, for DePIN founders specifically not being a core part of their business, it is critically important to somehow learn the lessons of the folks that have come before and avoid the mistakes that can ruin a project. Because one thing about launching crypto networks is that they are one directional in a way that Web2 businesses are not. There's a lot of permanent choices that you make early in a crypto network that once the circulating supply is out there, you can't take back compared to a Web2 company where you actually can. So it's very critical to get things right from the start.
Yes, very, very path dependent indeed. Amazing round off. I have one last question. If you had a crystal ball and you could ask one question about the future 10 years from now, it could be anything, doesn't have to be crypto. What would you ask?
I would ask if there's signs of extraterrestrial life on Earth by then, or how adjusted is society to. There actually are already signs, but I would ask is a common knowledge, or what's described the median person's like attitude towards extraterrestrial. This is one of the things where I feel like we're right on the cusp of it entering the Overton window, and how you would expect people to react when it becomes obvious that there are like aliens is it actually would take quite a while for it to like fully hit people's minds. And I think we're like in month 1 of 36 of this really hitting people's minds. There's, oh shit, there actually are aliens and we have undeniable evidence of it now. And I actually think there's going to be a lot of business opportunities around this. I think DePIN is a big part. Resiliency of infrastructure is a big, you'll see a lot more wealthy people starting to invest in solar and microgrid and batteries, but just things around resiliency and of their own. Also, I'm just very curious about it. So that's probably, if I had a 10-year look into the future, I'd probably ask where humans are in the Overton window of alien life, both because it'd be really interesting and you can make a lot of money by knowing when to time it.
Amazing, yeah. If you find the answer early, definitely tell me as well. I mean, I'd love to know. Well, thank you so much. It's been a great conversation. I'm so sure our founders, fellow VCs out there would have enjoyed this podcast very much. And maybe just let our listeners know where they can find you and what's the best way to reach out.
Yeah, thank you, Young, for having me. It's been awesome getting to chat. Our website is EV3.xyz, or you can find us on Twitter at Stankonia_crypto. Stankonia, like the Atlas Shrugged character.
Super, and thank you so much once again.